Welcome to my beginner's tutorial on how to trade Bitcoin over on Bybit. Now, this is a step-by-step guide. We're going to cut through all the jargon. It's going to be really simple. I've even put chapters in the timeline down below. So if you want to navigate through, rewatch something, you can easily do that. Feel free also to share this with any friends that may be interested in trading Bitcoin, Ethereum as well. If we could all smash the like button, that would super help this video out, help the channel. Please subscribe as well, and that way you can join all my future Bitcoin, Ethereum trade action. With that said, let's get straight into the video. So first up, what is Bybit? What is leverage trading? So Bybit is a platform where you can buy or sell Bitcoin when we're trading futures. And I'm not going to go into the complexities of what a future is. It doesn't really matter. Bybit allows us to buy Bitcoin and Ethereum on margin. And when I say we can sell Bitcoin and Ethereum on margin, that's called shorting. We can make money on Bybit when the price is going up and when the price is going down. When it comes down to leverage trading, you could think of it like a mortgage on a property. It's really simple actually. Let's say, for example, you were buying a $300,000 home and you wanted to put down 10% down payment. You're putting down 30,000, but you have control of the asset that's worth 300,000. That would be a 10-to-1 leverage in trading terms. Now, of course, if the property price goes up, let's say 10%, so it's now worth 330,000, you make the 10% on the total value of the trade, or in this case, the property. So you would make $30,000. Now, you've made that $30,000 by just putting in $30,000 because that was 10%. But in actual fact, you've made 100% profit because you've put down 30, you've made another 30, and the same is to be said in leverage trading, whether it be Forex or in this case, crypto. So in a nutshell, when we trade on leverage, we have the potential magnified earnings, but we also have magnified potential losses. This is why trading can be high risk. So you're in the right place to watch this beginner's tutorial because we're going to cover all the basics before you even put on a trade. That's really important. I hope that example makes sense to you, but obviously if there's anything that's unclear, feel free to leave a comment below and I'm happy to get back to you as soon as possible. So in order to get started, you're going to have to sign up for Bybit and get an account. Now, what you can do here, if you look underneath this video, the pinned comment will be my affiliate link, where signing up with my link, you'll earn up to $200 in bonuses when you deposit. Using my link's also a great way of supporting the video, supporting the channel, so I really appreciate that, guys. Now, upon clicking the link here, it's going to bring up this page where you register for an account. You literally can register in about 30 seconds. All you need is an email address, set up your password, and you're good to go. Now, an important thing to mention, guys, is a VPN. If you're in the States or the UK, you will need a VPN. I recommend ExpressVPN. They're probably one of the best VPNs I've used, really inexpensive, a couple of pounds or dollars a month, or you can check out NordVPN. They're pretty much the same thing. Once your VPN's set up, you're good to go. You can start trading. So now you're all set up, you now want to deposit some Bitcoin or Ethereum into your account. And the way that you do that is you're going to go to your username. You want to click onto My Assets. It will come up with this page here where you can see your holdings of Bitcoin, Ethereum, and a couple of other cryptocurrencies as well, including XRP. That's US dollars, by the way, if you just want to deposit cash. Now, what you do, if you're already holding Bitcoin or Ethereum, you can deposit it straight into your wallet there on Bitcoin. You can see here, deposit or Ethereum. Make sure if you're depositing Bitcoin, it goes without saying, deposit into Bitcoin. If you're doing it into Ethereum, like that. As an example, let's say it's Bitcoin. You simply click on deposit. It will generate a QR code, which you can use to scan. Say, for example, if you're sending it from a Coinbase wallet. Equally, you can use the wallet address, and obviously you can send the payment straight there. Payments typically, in my experience, take between 5 and 20 minutes. It's pretty quick. If, however, you don't already have Bitcoin or Ethereum or any cryptocurrency for that matter, what's really good about Bybit is they have a fiat gateway. You can click on this here and you can actually buy Bitcoin directly through their platform, or Ethereum, for example. It's in Aussie dollars at the moment. Let's say you wanted to buy 1,000 Australian dollars. 1,000 Australian dollars at the time of recording is 0.0131 Bitcoin. So you can easily buy Bitcoin straight into the platform. So that's how you deposit. Next up, we're looking at two different trade types that Bybit offer. Now, this can be a bit confusing at first for a lot of traders, particularly people that are completely new to trading, particularly crypto trading, but these two options are really simple and they actually both have a purpose. I tend to normally use inverse perpetual, and I'll explain what that is. So inverse perpetual is when it's coin margined. So you're using Bitcoin or Ethereum as the underlying asset in a trade. USDT perpetual, on the other hand, is when you're using cash, you're using US dollars to fund a trade. The reason why you have the option and have the difference, let's say for example you thought Bitcoin was going up, you wanted to put in some long positions, we're in a bull cycle like we are now, and obviously if you're using Bitcoin, or it could be Ethereum, a cryptocurrency, to fund your trade, you're going to end up being paid, should your trade win, your long position trade, in Bitcoin. And of course, if you're banking on something going up, you're going to want to be paid in that currency, so which is Bitcoin in that sense. On the other hand, if you wanted to short Bitcoin, because obviously on Bybit you can make money shorting and longing cryptocurrency, you may not necessarily want to do it on coin margin. The reason for that is if Bitcoin was going down in price and you won a trade because you shorted it, you wouldn't necessarily want more Bitcoin if the price of Bitcoin was devaluing, so you'd be better off in cash. However, for the most part, you're going to want to choose inverse perpetual, because assuming you're pretty bullish on Bitcoin, and most of the time, particularly at the moment in 2021, we're going long on Bitcoin, generally speaking, but there might be times where you want to use the USDT perpetual if you think it's going down or another crypto is going down. That tends to make more sense. I hope it's a clear explanation, but like with anything in this video, just leave a comment below with any questions. I'll promise to get back to everybody. So the next step here, we're going to look at the type of margin you can use. So we're going to assume we want to do inverse perpetual on, let's do Ethereum, Bitcoin, Ethereum, it's the same. We'll do Ethereum. I've been typically trading Ethereum a bit more at the moment. Let's look at the difference between cross and isolated margins. Now, this might be, again, something people look at and go, oh, I'm not sure about this. It's all a bit technical, a bit confusing. It really isn't. It's very, very simple once you understand it. And I'm going to explain it in a very simplified way. Using isolated margin, you're using the amount you've put on for that trade, and you can only lose the amount that you've put on for that trade. Of course, you can mitigate losses with things like stop losses, and we're going to cover that in this video coming up shortly. But using isolated is definitely my suggestion for beginners, because you can only lose what you're putting into that trade. If you're a bit more experienced, or when you become a bit more experienced, you may consider using cross margin. You're then able to use your whole portfolio of currency, cryptocurrency, to fund a trade. It can make sense in certain scenarios, but for beginners, I would stick with isolated for now. So guys, that brings us to our next point, which is the margin you use. We briefly touched upon in the start of the video what leverage is, and now we understand a bit more about what leverage is. You can understand how to use it in a trade. So as you can see at the moment, we're set at 10x leverage. Now the current price of Ethereum is $1,739, and the quantity here in US dollars is simply the value of your trade. Don't think too much about, oh, the price of Ethereum right now or price of Bitcoin. Really, what matters is the amount of money you want to trade. And let's say, for example, it's 1,000 US dollars for simple maths. 10x leverage would mean you would only need to fund that trade with $100 of your own money. It's 10x, 10 times 100 is 1,000. So you're using 100. Let's say, for example, you do well on your trade and it goes up 20%. You earn 20% on the $1,000, which is $200. Had you have just invested your $100 and it went up 20%, obviously that would be $20. So that's the power of margin. But like I said at the start of the video, it can work against you as well, and that's why we're going to cover risk to reward and stop losses shortly in this video as well. So now let's look at the basics of putting on a trade. So what you have here are three different trade types, okay? You have a limit order, a market order, and a conditional order, and I'll explain what each one of those are. So first of all, we've got a limit order. A limit order is there so you can set the price at which you want to enter a trade at. The market order is a price to just get into the market at what the current market rate is. So you can execute a trade quicker, but you may not necessarily get as good of a rate as if you were to do limit order. Now, a conditional order is there for you to put in a price that is triggered, so you can execute a trade, whether it's a short position or a long position, when the price, if the price is hit. So you may typically use that, and just looking at this graph here, don't worry about what's going on in the graph, that's not important. But let's say, for example, we were here, you can see at this point in the trade, and you didn't know what was happening here yet because we're only at this point here at the price of around $1,610, and you didn't know if the price was going to go up from here or down from here. What you could do is use a conditional order to set a price here, for example, for a buy. So if the price were to get here, you would buy it because it's broken through this resistance. Or you could set a conditional order here. So if it broke down, you may think, okay, it's selling off. And that conditional order is only activated when that price is hit. So a conditional order is good to kind of systematically put in a trade in place. So you don't have to be watching the chart like 24/7. So let's look at some trade examples using a limit order, a market order, and a conditional order. First, let's look at a limit order. So we can see the current price here for Ethereum is $1,733. But let's say, hypothetically speaking, we wanted to enter this trade when the price dips to $1,730, for example. So what we could do is put $1,730 into the limit order. That's the price of Ethereum that we want to buy the trade. We want to buy a contract that's $1,000 US, and again, all that means is our trade is $1,000, and we're using 10x leverage. So actually, the amount of money you're using for that trade is $100. Okay, so what you can do is simply press buy long, and it will put on the trade. I'm not going to do it because I don't want to do that particular trade. It's an example, but that's what you would do. If you want to short it, you think it's going down, you can press sell short. So next up, market order. Very simple with market order. You just simply need to put in the price of the trade, $1,000, and buy or short. You don't need to set the limit price because you're entering at the market rate. One of the main things I will mention about using limit orders, when you do a limit order, you are a market maker. And with market makers, you actually get a small rebate of any fees that you have to pay to Bybit for trading. The fees on Bybit are quite reasonable, and I'm going to cover that later in the video, but it's nice to get a rebate of the fee for being a Bybit maker. If you use market, there is a small fee attached to it because you're just able to enter the market. So conditional order, trigger price. What does a trigger price mean? So again, you can use market or limit for a conditional order. Let's say we put a market in this particular circumstance. Trigger price, you might want to put again at $1,730. That's the trigger price, and a contract of $1,000 US. So when and if it triggers at $1,730, you can select buy or sell short. Equally, if you wanted to do a conditional order that was a limit order, you could set the trigger price, the limit price. You pretty much want to put the same amount in that figure. Again, you can put the quantity, and you should put post only. That way, when it closes, it will force it to close as a limit order. That's better than doing it as a market order because you get the rebate of that fee. So let's look at stop losses and taking profits. This is one of the most important part of trading. Stop losses allow you to set a price that is almost like a protection in terms of the price going further down, so you can actually mitigate your losses. Now, it's very, very important to set your stop loss above your liquidation price, and the next chapter in this video is liquidation, and that's equally as important. But when it comes to stop losses, you always want to have a stop loss on a trade. If you don't have a stop loss, you could meet the liquidation price, which is very, very dangerous for your funds. Take profits, on the other hand, is a way, as it suggests, you can take profits at a certain price. When you set a take profit, you set it at the price where you believe the price is going. And the reason you would want to maybe automate that is because the price could go up like that, and for it to only go down again. And you may see on the chart that actually you think the price is going here, so you may want to take your profit here before the price rebounds back down again. Okay, liquidation. Liquidation is when you basically run out of margin. This is why it's important not to over leverage yourself, not to use too much margin. The best thing you can do in terms of not getting liquidated is to use the Bybit calculator. Very, very handy tool, which not too many people use when they start trading, and really it's one of the most important things because you don't want to be liquidated. Honestly, you can lose a lot of money that way, so let me warn you of that risk. The way you use this calculator, let's say for example we're on 10x leverage. You enter your leverage. Let's say you're buying $1,000 US, and we're on Bitcoin. We went back to Bitcoin here. With the price, we can see it's currently at around, let's just say 54,500. Let's say that's where we want to enter the trade. And then it will give you the liquidation price. You can see it's $49,771. You want to make sure, for example, if you're in a long position here, you're buying Bitcoin, a long trade, you want to make sure that your stop loss is above this price, above $49,771. That means that you will be stopped out of your trade via a stop loss prior to liquidation. If you get liquidated, you can lose your whole fund of that trade. So you don't want that to happen. So guys, when it comes to closing a trade, there's a few ways in which you can do this. Using the example on my screen, you can see I've got an Ethereum trade open at the moment. Unfortunately, it's down a little bit. I'm $54 down, but I'm not worried because I've done my research prior and I'm quite confident in this trade. I'll let you know how it goes. In fact, leave your comments below and I'll keep you updated on that one if you're interested. Now, what you do to close a trade, you can do it actively while this position is open. And these are all your open positions where it says positions. You can close it here, limit or market. Again, limit means you can select the price you want to close it at and it's going to give you a rebate of the fee. Market will give you instant access to the market to liquidate your position, not as in get liquidated, but sell that position. If you were worried that it was going down very quickly and you want to get out the market quickly, you can select market basically. Another way to close a trade is by using take profit or stop loss like I explained. Take profit will close the trade should it be triggered at that price. I've got it set at $2,019 and I've got stop loss set at $1,612. So should any of these prices be hit, it will close the trade. The last way you can close a trade, and this is the worst way, is being liquidated. If you get liquidated, you can see my liquidation price for this trade is $1,602, but I've nicely got my stop loss set by $10 above this, so I won't be liquidated whatever happens. When you set a stop loss or a take profit, it also counts as a conditional order because it is a conditional order, so to speak. You can see here if I go into my conditionals, I've got a price set here of 1,612, that's my stop loss, and I've got 2019. Both of these are orders. They are stop loss and take profits, but they count as orders, conditional orders. So let's talk about the chart a bit and analyzing the chart. I mean, the best thing you can do here, guys, if you're not already, subscribe to my channel. I'm talking about price action between Ethereum, Bitcoin, covering the charts. And of course, if you want to cover my up-to-date real-time trades, feel free to check me out on Patreon. Join the community there. There will be a link above and a link in the description. If you join the community there, we have a private Discord group and I give my daily updates on what's going on in the market, any trades I'm putting on in crypto and growth stocks. So join me there as well. But looking at the chart here, you do get the TradingView chart on Bybit. However, in my opinion, I much prefer using the actual TradingView platform. I simply put in the same chart, Ethereum contract on Bybit, and there's a lot more choices, a lot more tools, and it's just so much easier to use. The one on Bybit, although it works, it's a bit clunky. I suggest using TradingView. I'll put my link down below for TradingView. They offer a free service as well, which you can try. However, there is a paid service, which is obviously a bit better. You get more features. Perhaps start off with the free one and then upgrade to the paid one should you need to. So check the link down below for that. So is Bybit safe? Is it trustworthy? Yes and a yes. It's a very, very good platform. I've personally been with them over a year now, never had any issues. And when I've had a very small customer service issue, it was actually to do with the username. I simply contacted the support here and it's very, very good. Their customer service is brilliant. Very, very transparent platform to use. Highly recommend them. I have tried a couple of the other platforms, which they're okay as well, but Bybit was my favorite, and that's why I'm talking about them in this video. Now, when it comes to fees, Bybit are kind of in the middle. They're not ridiculously cheap and they're definitely not expensive. It gives me confidence that they're priced in the middle because it means they're offering quality and they're not overcharging either. So they're nicely placed in the middle. You can see here, without going into it too deep, because you can come and check this page, you just go onto the Bybit and look at the fees. But you can see what I was talking about here. Markers rebate, that's if you're doing a limit order, you get 0.025% of the fee back. So that's your limit orders. If you do market orders, you're going to be charged a trading fee of 0.075. So if you concentrate on just doing limit orders, you can actually trade essentially for free. Now, I'm sure there's bound to be questions with this. This was a beginner's step-by-step guide. Of course, if there's any questions, leave them in the comments below. If you found value in this video, make sure to smash the like button, share it with your friends, and I look forward to seeing you guys around for more technical analysis videos. And I plan on doing a more advanced, let's say intermediate tutorial on Bybit following this one, should the demand be there. Really appreciate you joining me for this one, guys, and I'll see you on the next video. Take care. Bye.